Alright, so what's up, family? I know I haven't posted a video in a while, and that's because last week I didn't actually take any profitable trades, and it pretty much happens. Not every trade is gonna be a winner, and especially with my strategy, I know what my win rate is, and I know how much I can expect to lose in a row before I actually have to look to see like, is there a problem or an issue, right? And that's the reason for backtesting. We normally recommend that you backtest up to 3 months before you actually put a strategy into an account so you can tell, okay, how many losses can I take in a row? Do I take 3 losses in a row? Is it four? Do I take five? I actually can permit up to 7 losses in a row before actually seeing a profitable trade. But I know that I personally end every single month profitable, right? Now this trade is a 3 to 1 risk to reward ratio, and I want to bring something up to you guys. So like with a 3 to 1 risk to reward ratio, let's say out of a sample of 10 trades, right? That means we win 3 and lose 7. Let's say we win 3 and lose 7, right? So this is a 30% win rate. If you win 3 and lose 7, since I'm risking every time I put $1 out, I get 3. I actually won 9 and lost 7. So overall, I would be up 2 R or 2 risk to reward. It basically is whatever it is. So if you risk 3%, then you would multiply this by 3 and it would be equal to 6R. If you risk 1% like me, it would be equal to, as you see it, 2R. If you risk 0.5%, it would be equal to 1R, right? Or 1% of your total account equity, right? So this is all you really need to survive in trading and to actually make money is a 30% win rate. Sometimes even less. Because if you're trading at a 5 to 1 risk to reward ratio, you can permit yourself to lose so much more. Like you can literally lose, you can go 2 versus 8 to the 8 in 10 trades and still be up because you'll be up 10 versus 8. Because for every $1 you put, you get 5 back, which would give you the same 2. Right now, if you put this as 30% instead, so let's say we do 3 to 7, then now you have 15 versus 7. This is clearly much more R just from winning a little bit more, right? So this is what you want to frame as a trader. You don't want to be going for 1 to 1 trades or 2 to 1 trades. Your minimum should always be a 3 to 1. So like for this trade, if I did take it at the target that I would have, which is here, normal target, you see that it would be a 2.2. Now this isn't worth it for me. So I always extend my trades to 3 hour an hour, right? If I feel like it's hit us at liquidity and it may reverse, then I will put my trade at break even and let it ride out to hit 3 hour an hour. Because if it doesn't go for 3 hour an hour, I'm really not very much interested in it because it will throw off my overall profit curve, right? Now here we can see again we have our bread and butter setup. So the market traded into this, created this high at 2 a.m. We traded above. This is our liquidity grab. Traded below. We had a market structure shift right here. Candle traded down. Now I didn't get an entry here because I would have wanted price to retrace to at least 50%. And as you can see, the fair value gap here is not even in 50%. It would have been an entry up here if I had to enter. But since I saw this bullish candle printed, as I always say, I do not want price to trade past the bullish candle in bearish order flow, right? So we broke down again. We did not create a market structure shift, but we did, sorry, but we didn't create a fair value gap. So I wasn't looking for any entries here. And I wasn't looking for the entry back here either because we had this bearish order block right here. Okay, so we came back up. If I did take an entry here, it would have been nice, but this is against my rules, okay? So you got again, you have to stick to your rules. So someone else would have probably taken this trade, but this isn't my setup, right? So I left it. Price traded down again. As you can see, I put a light bulb here. This again is another market structure shift. We have very big imbalance. Price traded down. As you can see, we're left behind again an order block. So I don't want price to trade above this. So I drew my fib from the order block high to the low of the entire move. And here we can see that we have a M5 fair value gap, which is in our discount. So what do we want? We want to see price come into the fair value gap in discount and then reject, which is exactly what we got. So we got price tapping in, rejecting. We had some lethargic price action. Price came back again, created a double top, sold off, hit our target, then came back and actually took out this liquidity. And the rest of the day was pretty much a sell off, right? It was overall bearish on the pair, and we would have gotten exactly that if we stayed in, right? As you can see over here, I had this losing trade. So you also have to keep in mind that not because you lose a trade means that you're wrong about the setup, right? It could just be your entry area that's wrong. So here, my entry criteria, as you can see, I would have got personally gotten stopped out. But if I was in this trade, it would have hit eventually right over here, and I would have been pretty much happy with the profit. This is a 18 to 1, as you can see, right? So maybe it's a little bit too greedy of the stop loss here, but I basically trade my strategy at face value. So I don't change anything as I go along. I backtested it the way it is, and I execute it the way it is every single day. It's basically like a robot. I execute like the algorithm, right? Now I'm actually working on developing some new trading execution styles. And when I do backtest it again, I backtest or forward test for at least 3 months. I normally try to see at least 100 trades before I take anything into a live account. I will bring it over to you guys and show you guys how I handle it when I do it, okay? But this is the trade that I took yesterday. Hit that 3 to 1. I actually took a loss today. You see here we have the all block, we have the market shift, 50% of the move, and I wanted to enter here, but we didn't quite get that. But price did come lower. We created equal lows and then we shifted higher. We had this whipsaw action over here, which is much crazier in GU. But I'll leave you guys to refer to your charts to see what exactly happened here and kind of give you homework to look at what exactly caused this in price, right? So overall, I'm pretty much getting what I expected. As you can see, I have my arrows on here. I wanted price to trade up inside of this and potentially drop from here, potentially, right? It doesn't have to, but potentially. I'm looking for the same thing on GU, market to trade up into the inefficiency and then reject. So I'm looking for either an overall bullish close on the week or an overall bearish close, because as you can see, we're very, very extended down bearishly. But on the DXY, I'm looking for price to come into the mean threshold of this monthly order block. So you see all these up candles here. This is an order block, right? I'm looking for a price to kind of get up into here on the monthly before I really look at overall sales on overall buys, sorry, on EU and GU and overall sales on DXY. So that's the business for today, guys. Hopefully, I'm gonna give you guys another video soon. And feel free to ask any questions if you have any. Like if you want to see some more videos. And as soon as I'm ready with the new trading style, well, you guys gonna be the first ones that I show it to.